Welcome back to Unday Radar Talks. Alibaba. Alibaba reported revenue for the fiscal fourth quarter ended in March that exceeded expectations, but the Chinese e-commerce giant's net profit fell sharply. Net profit was 3.3 billion yuan, a year-on-year decrease of 85%. The company's shares fell more than 5% in pre-market trading on Tuesday. The company's shares rose nearly 6% on Monday, hitting a 6-month high. The trading volume was 32 million shares and the turnover rate was 1.6%. These two figures are the highest in the stock's last 7 trading days, which is obviously unusual. Let's take a look at the stock's 30-minute chart. The stock saw heavy trading volume on May 2nd and subsequently fell a bit, but did not fall below the May 2nd support level. On May 13th, the stock was heavily traded throughout the day. We saw a large number of transactions in the stock 3 hours after the opening and at the end of the day. Does this position mean that capital is withdrawing from the stock? Let's take a look at the position cost distribution of the stock. The current position profit rate of the stock is as high as 99.6%, which shows that the current selling pressure faced by the stock is still very high. We see that the main concentration area of the stock's positions is below $76. Which is a profit margin of 10% or more from the current price of the stock, which will obviously cause a lot of selling pressure on the stock. In 2023, Alibaba experienced a difficult year as the company carried out the largest corporate structure reform in its history. The company has also separately implemented several high-profile management changes, with a new CEO set to take over in September. The Chinese tech giant said earlier this year it would increase its share buyback program by $25 billion by the end of March 2027 to convey confidence to shareholders. Forecast of Alibaba's stock price. It's clear the stock is facing a lot of selling pressure right now. A sharp year-over-year drop in net profit in the latest quarter could have a negative impact on the stock price in the short term. The stock's trading trend on Monday seems to be seeing a lot of capital exiting the stock, so I think the stock will face a price pullback next. I set resistance at $78.40.
Meta Platforms.
Meta stock fell 1.72% on Monday, ending an 8-day winning streak. The stock has risen by about 10% in the last 8 trading days, and it is clear that further gains will face significant selling pressure. The stock's trading volume on Monday was 15 million shares, which was higher than the previous 4 trading days. The turnover rate was 0.67%, which was also higher than the previous 4 trading days. Has the stock started to fall? At this position, it seems that investors have reason to sell the stock because there is objective room for profit. Let's take a look at the stock's 30-minute chart. We saw a large number of transactions on the day the stock's quarterly earnings report was released on April 25th, and its stock price also fell by 10% on that day. The stock then adjusted its price downwards and started a short-lived bull market. It is worth noting that the price dropped significantly at both points A and B. Is there a large amount of capital leaving here? Not sure, but it doesn't feel good. In short, the price fell sharply on Monday, and no sharp price increase was seen in the late trading. Let's take a look at the position cost distribution of the stock. The current position profit rate of the stock is 51.58%, and the selling pressure is relatively high. However, we see that there is still a large concentration of positions in the area below $443, which will obviously create short-term selling pressure on the stock. Meta Platforms has struggled with declining investor confidence despite better-than-expected financial results for its fiscal first quarter of 2024. Meta shares have fallen nearly 7% over the past month. As CEO Mark Zuckerberg made an ambitious push into artificial intelligence and the virtual universe, the company took a series of activities to expand the company's business, leading to a decline in the company's performance. Meta Platforms founder Mark Zuckerberg emphasized the importance of artificial intelligence during the company's recent earnings call. Yet, despite his enthusiasm for the future, investors appear skeptical. Forecast for Meta's stock price. I think the stock will continue to fall. The approximately 10% increase in the past 2 weeks is a reason for short-term investors to sell stocks. At the same time, I also saw some signs of capital withdrawal. My resistance level is $450. NVIDIA stock has been trading sideways for 4 trading days, and the price shows no signs of an upward breakthrough. This situation is confusing. It is obvious that this area is under strong selling pressure and needs to wait for short sellers to sell their stocks. It is worth mentioning that the trading volume in the last 3 trading days has not increased significantly. There were 29 million shares traded on Monday, a new low in a month, and the turnover rate was 1.21%, which also did not increase significantly. This is a good set of data, indicating that there is not yet a large amount of capital exiting the stock. Let's take a look at the stock's 30-minute chart. $922 was the stock's recent high. Although the stock has been trading within a narrow price range in recent trading days, we've still seen a few spots where the price suddenly dropped sharply, such as the positions of point A, point B, point C, point D, and point E. Although prices eventually moved higher, these price actions are suspicious. Let's take a look at the position cost distribution of the stock. The current position profit rate of the stock is 85.98%, and the selling pressure is relatively high. But we also see that above $864 is the area where most of the stock's positions are currently concentrated. So even if the price adjusts downward, I don't think the stock will fall significantly. NVIDIA will announce its first quarter results for fiscal year 2025 on May 22nd, and its stock price should fluctuate significantly on the day of the announcement. So should you buy the stock before May 22nd? NVIDIA's main product, GPU, is critical for AI model development and training. GPUs allow for parallel processing, allowing them to perform multiple tasks simultaneously. This is critical for training AI models, as multiple iterations must occur before an AI model is usable. NVIDIA's GPUs are the best on the market for AI training, and its customers buy thousands of them at a time to equip their servers with the best technology possible. So market demand is important for the company to keep growing. For investors who like tech stocks, this is clearly a reason to buy. But if NVIDIA fails to meet expectations this quarter, the stock could see a serious sell-off. Investors must examine the situation more carefully at this time to determine whether a sell-off is justified or a buying opportunity. Price prediction for NVIDIA stock. The stock's recent performance makes me feel like there may be a price correction ahead of the quarterly earnings release, and my resistance level is $877.1. That's it. This is my analysis. If you have different ideas, please leave a message below. Thank you for watching. If you like my video, please give a thumbs up and click the subscribe button. See you in the next video.